I have started the recording. Okay. Many of you suggested that we start with this question here, question 1. Okay, we are going to start with question 1. Let me just open up my Word and then we are good to go. I hope the person who suggested question 1 will be participating. Hopefully. So let me just show you on that side. Guys, one question before we start. Can you guys hear me properly? Is my network okay? Because I feel like it's not okay.
I can hear you properly.
Oh, okay, thanks. So let's just start with question number 1. Question number 1 is bank rec. Before we start bank rec, I just want to give you a little bit of a background here. When it comes to the bank reconciliation, this is the only section in the exam that is always there, and it becomes a little bit different from the ordinary way we apply the principles. That is bank reconciliation for you. It's different to how we apply other principles on the other questions. So question 1, we're going to do bank reconciliation. Whenever you see your bank reconciliation in the exam, let me first. Okay, sorry about that. Let's continue. So whenever you see your bank reconciliation question, first thing that should come into mind is you need to draft your 2 books. Which books are those? The books that you need to draft, it's going to be your supplementary cash book. That is going to be your first book. So you draw a T account. So you're going to draw your T account. Supplementary cash book, you're going to call this supplementary cash book. A supplementary cash book, it's a replacement book for your trust and your business account. Things that are missing in the trust and in the business account, they are supplemented here on the supplementary book. That's why it's called the supplementary book. It's supplement. It's a supplementary book. It replaces what is missing on the first book. The second book you're going to have, it's called the bank reconciliation. Bank reconciliation. That is the second book that you're going to have. So you have your 2 accounts. The supplementary cash book replaces your books. The bank reconciliation replaces your bank statement. That's what those 2 things do, the supplementary and the bank rec. Okay, so the first question, question number 1 for 2023 August, it says that your trust cash book balance as of 31 March 2023 reflected a balance of 1 million. That was the balance of the trust. Since the supplementary book replaces the trust, we are going to use the supplementary book here. So in the supplementary cash book, we deal with anything related to cash book. Okay, let's start dealing with the first one. The first question says it's a million. There's a balance of 1 million. Now, the first thing when you look at the balance, you need to determine, is this a positive or a negative balance? This is a positive balance. Anything that is positive goes to the debit side. So we're going to say balance. Anything that is positive goes to the debit side of the supplementary cash book. That is why that 1 million goes to the debit side. Let me just write debit side and credit side for people who haven't written the exam before, who are going to write it for the first time. So we have the debit side and we have the credit side. So we have debit and credit. Sometimes it's written this way. Sometimes it's written as DR and CR. That is the debit and credit side. So that 1 million goes to the debit side because it's a positive. Are you guys with me? Guys, are you there?
Yes, we are here.
Okay, great. Mr. Silo, can you turn off your screen, please? Okay, so let's continue. So as we read along here, it says the bank statement balance at the same date was 176,391. Now, this one is talking about the bank reconciliation statement. It's what we do with the bank. Anything that is related to the bank comes under bank reconciliation. So since this, what do you call it? Since this 176,000, it's a bank statement balance, it's gonna go into the bank reconciliation statement. Now, first thing first that we need to ask ourselves, is this a positive or a negative? This is a positive balance because they just gave us a balance. They didn't say it's a negative, they didn't say that it's overdraft. It's just a balance. Just a balance means it's positive. Now, when it comes to the bank reconciliation statement, anything that is positive now goes to the credit side. It no longer goes to the debit, but it goes to the credit side. So since this balance is positive, we are going to put it here. We're going to say balance 176,391. That's how you do it. So in the supplementary cash book, anything that is positive goes on debit. On the bank reconciliation, anything that is positive goes on the credit. That is how you do your bank reconciliation. Okay, let's keep reading. Okay, we got the balance. A comparison of the cash book and the bank statement for March 2023 reveals the following. So when we are looking at our bank statement and our books, we are seeing that there's a difference. This is the difference that we see. What is the first difference? The first difference is this one. There was a direct deposit by a client of 300,000 into your trust bank account, which has not been recorded in the cash book. Now, as I have said before, whenever we are dealing with something in the cash book, we deal with it in the supplementary cash book. So cash book goes hand in hand with cash book. So this direct deposit is missing from the cash book, which means it's a positive. Why? A deposit is a positive. Why is it a positive? Because it's money coming in. Money that is coming in, it's a positive. That's why we say it's a positive. And we know that all the positives go on the debit side of the supplementary. We're gonna say, so there's a direct deposit. How much? 300,000. So the direct deposit was 300,000. That's how you do it. Then we go to number 2. Number 2 says interest of 29,000 has not been entered in the cash book. Interest of 29,000 was not being entered in the cash book. This is also a cash book transaction. The interest of 29,000 has not been entered in the cash book. So interest, we know it's positive. When we talk about interest, we are talking about something that is positive. Why is the interest positive? It's positive because the balance is also positive. So if you have a positive balance, the interest will also be positive. So this interest is positive. It's also going to come the side of the supplementary cash book because it was missing 29,000. Okay, let me just be a little bit quick because nobody is answering or participating. Deposits totaling 35,000 received on 30 March 2023 are not reflected on the bank statement. So there are deposits which are worth 35,000 which are not reflected on the bank statement. We are going to go to the bank reconciliation statement because now we are dealing with the bank. That statement there. So deposits, are deposits negative or positive? We know that deposits are positive because money is coming into our possession. So under bank reconciliation, we are going to say, since these deposits are a positive, we're going to put them on the credit side. So we're going to say deposits totally. Descriptions here. So this was 35,000. 20,000. Excellent. Then we continue. Number 4 says the bank debited your trust banking account with trust banking charges of 20,000. The bank debited your trust banking account with trust banking charges of 20,000 to a mere person who just went to write without attending anything, or a person who did not study the notes. This would seem like, no man, what's wrong? There's nothing wrong here. The problem with number 4 is this, as I am reading it. If you have ever read anything that's related to the trust, you know that the trust account cannot pay charges. The trust account does not pay bank charges. The bank charges are charged on the business. So this is an error. So number 4, it's an error. Why is it an error? It's an error because trust banking charges cannot be charged on the trust banking account. They must go to the business. That is an error. So the bank debited your trust banking account with trust banking charges of 20,000. So the debit, this amount was supposed to be on the debit side because they said debit. They can either say debit or just give you a clue. So this is a debit amount. Since it's a debit amount, when we correct errors, we correct it on the opposite side. What is the opposite of debit? It's credit. So that amount is going to come here. Trust banking error. So the trust banking charges error is going to come this side, and we're going to put it there. How much was it? It was 20,000. That's why we're putting it there. That is a trust banking error because I told you the reason. So let's just say banking error because it will not fit. Thank you. Let's continue. Number 5 says there's an electronic transfer by a client of 1,000 which has not been entered in the cash book. So now we are going back to the cash book because we are talking about the cash book. Now in the cash book, there's an electronic transfer which has not been entered. An electronic transfer is an EFT. So you received an EFT from a client and it has not been entered. How do we know that we are receiving it? They say electronic transfer by client. If they say electronic transfer by firm, that would be us. But since they say by client, it's from the client and it's a positive since we are receiving it. So we're going to say electronic transfer of how much? How much was the electronic transfer? The electronic transfer was 1,000. There we go. That's why that 1,000 comes there. And then number 6 says an EFT trust payment for 98,609 made by you in payment of a client's account appears on the bank statement but is not shown in the cash book. Again, we are dealing with the cash book for number 6 because there was the trust payment for 98,000 which was made by us when we were paying the client, which only appears on the bank statement but not on the cash book. Since this is a payment, it's going to go on the credit side of the cash book because money is leaving our account. It's negative. So we are going to say, what was it? EFT trust. Let's just put it like that. 98,000. How it goes. And then after that, we are going to continue and say number 7. So number 7 says that an erroneous EFT deposit made into the trust banking account for 330,000, which is already recorded in your cash book, has been reversed by the bank. The reversal is not recorded in your cash book. So now we are also still dealing with the cash book. There was an erroneous EFT deposit made into the trust banking account for 330,000. So this was an error. There was an error made for 330,000, which is already recorded in your cash book, okay, has been reversed by the bank. Okay, so there was an erroneous EFT payment made into the trust banking account. This one is a little bit complicated for 330, which is already recorded in your cash book. Okay, it's already there. Which erroneous deposit made into the trust banking account? Okay, which has been reversed by the bank. The reversal is not recorded in your cash book. Okay, so since this money was already recorded in our book, it means that it was on the debit side. But since now it has been reversed, it was coming in. A reverse means going back. It's now a payment. We are paying back whoever paid the money because the money came in, it was a deposit, then we reverse it. And the reverse part is what we're supposed to do in the supplementary cash book. When we reverse a deposit, we are paying. So this one is going to be on credit side because it's a negative. Also, money is leaving our possession. So erroneous EFT. Erroneous EFT, how much was the EFT? 90,000. It was 330,000. Yes, 330,000. Great. Number 8 says that EFT payment made by you EFT payment made from the business account for 400,000 is incorrectly reflected on the trust banking account. When we start talking about the trust banking account, we go to the bank reconciliation statement because that's where we deal with bank things. So EFT payment made from the business bank account for 400,000 is incorrectly reflected on the trust banking account. So this was a payment, and we know that payments, they go on the debit side here. But this payment was an error, and we know that when we correct errors, we do them on the opposite side. Initially, the payment was supposed to come here, but since it's an error, we have to put it on the opposite side. We have to put it here on the credit side because it goes on the opposite side. All the errors go on the opposite side. Payment. How much was it? It was 400,000. So we're gonna have our 400,000 there. And then the final one, number 9. Number 9 says a trust payment of 300,000 made by you was incorrectly entered as 30,000 in the cash book. Now we are dealing with the cash book again. We go back to the supplementary cash book. So there was a trust payment of 300 made by you, which was correctly entered as 30,000. So the way we correct errors here in the bank reconciliation under supplementary cash book, this is a payment. So when an error is a payment, we take the wrong amount and put it on the opposite side. Remember, payment was supposed to be here. It was supposed to be here on the credit side. It was supposed to come here on the credit side. But since it's an error, we put it on the opposite side. The wrong amount, we put it on the opposite side. What is the opposite of payment? Deposit. So we're going to come say, the trust payment error was how much? The trust payment error was, which one was the wrong one? It was the 30,000. The 30,000 was the one that was entered incorrectly. And then the correct amount here, we're going to say trust payment. I don't know how to put this one. Let's just say right. This one is an error. This one was supposed to be 300. Payment. Amount that was supposed to be sent out. You correct an error. You bring back the wrong amount and you take out the right amount. That is how you correct an error. Okay, now we are done. We corrected all the errors. We did everything that was supposed to be done. We put everything in its place. Now it's time to do the final steps that needs to be done for both accounts. What we need to do for both accounts is the following. Let me just breathe and then we're going to continue. So what we're supposed to do here is the following. It's very simple, it's straightforward, doesn't have a lot of complications. This is what you do. You look at the supplementary cash book. You start with the supplementary cash book. You say which side has a bigger amount when added together. When you add these amounts together, which side gives you more amounts? When I look at these sides, the debit side and the credit side, I can see that the debit side has a larger amount because it already has $1 million. And when we add the other amounts, it's going to be more. So I'm going to say the debit side has more amounts. Then I'm going to add everything that is there and use it as a balance. Side and use it as a balance. So I'm going to say 1 million plus 300,000 plus 29,000 plus 100,000 plus 30,000. That is going to give you 1.36000, 1.3 million. The balance is 1.3 million. So when the balance is that, you're going to use this same balance that you got for both sides. You're going to use this balance for both sides. Be your balance for both sides. So you're going to say balance. Balance. That is what you just do here. Excuse me, let me just do this here. We go. So now it's balanced. The amounts are equal on both sides now. Now, when you look at this supplementary cash book, you know that these amounts, they do not equal to 1.3 million. They don't. So what you need to do from there, you need to say the balance, 1.6 million, minus all the amounts that are on the credit side. So the first one is going to be 98,609 minus again 330,000 minus again 300,000. That is going to give you a total of 631,391. What do you call this amount? This amount, you're going to call it the balance CF. It's balance carried forward. The balance carried forward makes sure that all the amounts that are there are equal, because now when you add all these amounts, these 4 amounts here, they're going to give you this 1.6 million. When you add them up all together, they're going to give you this 1.6 million, 1.3 million. This one is called the balance carried forward for a good reason. You will see the reason. Okay, let's go to the bank reconciliation and do the same thing. We look at the debit side, we look at the credit side. Which side has a bigger amount? Obviously, the credit side has a bigger amount because we have any amount. So we're going to say the balance. Now we are going to add up everything that is on that column. We are going to add the 1,76391 plus 35,000 plus 20,000 plus 400,000. The balance is going to be 631,391. That is supposed to be the balance for both sides. We use it as a balance for both sides. The 631,391 is the balance for the both sides. And then after we do that, we take the balance carried forward. You remember this balance carried forward? We take it, we bring it down to the supplementary cash book. In the supplementary cash book, we go to the side that has less amounts. When added together, it gives you less. And on this one, it's going to be the debit side because there's nothing. And we're going to put the balance carried forward and it will equal to the balance. And then everything is balanced out. Is that clear? Yes, Mike, it's clear. We hear you. Okay, so let's continue. Okay, let's continue. We're gonna go to question 2. I'm Just gonna do a little bit of question 2. I'm not gonna do all of it. I'm just gonna explain a little bit, then pass. So question 2, when we read question 2 says you are required to record the following entries in your books of prime entry. Post those entries to your respective ledgers. Then the question starts. 2.1. You receive a proof of an EFT payment in the amount of 17,000 from your instructed correspondent. So whenever you are dealing with correspondent and you read it and you see the word you receive, automatically just know that it's instructing correspondent. You are dealing with instructing correspondent, and the instructing correspondent has 5 steps of instructing the steps. Step number 1, the first step is EFT received. There's a book that you're going to use, which is the TCB. You're going to use the TCB for the EFT received. That is step 1. Then step 2, you're going to have yourself money collected or money received. This is going to be the money that you collected. The book that you're going to reflect this amount on, it's called the trust journal. Use the trust journal to reflect that amount. Then step number 3, you're going to show your fees and disbursements. The book that you're going to use to show this, it's going to be your trust journal again. You show this in a trust journal. And then number 4, you're going to show your allowance. In an allowance, to show an allowance, you use a fee journal. And then step number 5. Step number 5, you are going to pay yourself as a lawyer. Paying yourself as a lawyer, use TCB and BCB and transfer journal. You always use 3 things when you pay yourself. So that is what they wanted you to do under question 2. They wanted you to do these following things and then also draft a statement of account. Obviously, I'm not going to touch into the statement of account because we have limited time. I want to go play some FIFA. This is a weekend, of course. I want to release some stress. So question 3, let's move to question 3. Question 3 is conveyancing. Guys, conveyancing is so easy. And they always ask it the same way every single time. What you need to know for you to pass conveyancing, you need to distinguish between statements versus transactions. What is a statement and what is a transaction? When I'm reading, what is a statement and what is a transaction? Is this thing that I'm reading here a statement? Is this thing that I'm reading here a transaction? Number 2, what you need to be able to do is know deposits and payments. So that a deposit goes on the debit side, a payment goes on the credit side. And most transactions are recorded account, the TCB. Why are they recorded on the TCB? The reason why they are recorded on the TCB is because most of these things, they are dealing with the client. Under conveyancing, you are dealing with the client. So that is why most of them are on that. So conveyancing, statements versus transaction, no deposits and payments. Most transactions are recorded on the trust account. Any other thing here? Let me just check real quick. No, there isn't anything because we're not going to do conveyancing. I just wanted to show you this. When you join our course, the full course, this is what we do in class. I'm going to teach you how you do these things when you join us. Question 4 obviously is theory. We're not going to touch into that because theory always changes. The examiner likes that. Okay, let me just go back to question number 2 here. Question number 2 here. Let me just show you the amounts that you're supposed to use. Let me show you the amount. Let's start with the EFT amount that you were supposed to use here. It was supposed to be, let's check, an EFT payment in the amount of from your correspondent. You were supposed to use the 17,061. That is the amount you use for EFT received. Then let's see which one do you use for money collected. Number 2 says on the accounting statement, your correspondent recorded the payment from the judgment debtor, the Bagley, 21,000. So the 21,000 is going to be the money that you collected. Okay, there we go. 21,500. Sorry about that. And then number 3, your fees and disbursements. Your fees and disbursement, it's all those things added together. Your 52, that and added together. Let me just add it together. 2520 plus 378 plus 2507. That is going to be 5405. There was nothing complicated here. If you know the steps, you was just supposed to use this. And then we have your allowance. How much was your allowance? This question here says your instructed correspondent gave you an allowance of 840 on their fees and 128 VAT. So you just need to add all those amounts together. 840 plus 126 plus 126. So your total allowance was going to be 966. VAT inclusive. Why am I saying VAT inclusive? Just to show you that it includes VAT. That is the amount that you were supposed to use. And how much were you going to pay yourself? How much were you supposed to pay yourself? Now, it's a little bit tricky from here, how much you were supposed to pay yourself, or is it written? Okay, it's not written. So this one here, if you had done the work, you would see that you need to go on the TCB and say the debit side minus the credit side in order for you to get the proper amount that you need to pay yourself. So that is how you get the amount that you're supposed to pay yourself. No, actually, sorry. Why am I saying that? Paying yourself. The amount that you pay yourself is the 966. Apologies for that. You pay yourself 966. That is the 966 that you're supposed to pay yourself. This one here, the allowance is money owed to you. Because guys, remember, under correspondent, the instructing correspondent is supposed to get 1/3. You can't get more than 1/3, or you get what is agreed upon. So that is the amount that you're going to get. Oh yeah, and I left one last step, the refund to the client. That is the final step. The refund to the client is the one where you have to do the step that I mentioned on step 5. You have to say debit minus credit on the TCB. So for step 5, you use the same amount as you got from step 4. Sorry for saying that before, but then on step 6, you use that strategy I told you. You go to the TCB, the EFT you received plus all the amounts that left the account, then you get your amount. In a nutshell, this paper was simple. This paper was straightforward. If you really want to pass it for next year, if you are serious for next year, I just want to advertise as I'm closing off here, because this video will be uploaded on YouTube. So I just want to show you how much we charge for our classes, our full course. There we go. So for our full course, we will charge you 650. This is for paper 2 and paper 4. And we are done with paper 1. We will be offering paper 1 also. You can join us for paper 1. But in a nutshell, this is what we offer. Attend till you pass. Offer is valid for 2 exam sessions. There is our WhatsApp contact there, our business WhatsApp contact. Just text us. We offer orals for free if you join our course, or you can just join us for orals, which is 250. But all in all, in a nutshell, board exams are easy. Just come join us. Next year, we are aiming for 300 students. This year, we had 160. Next year, we are going big. We are going for 300. Thank you. Enjoy your day and good luck for your exam in March. Those who are doing oral, good luck also.
Thank you.
Thank you. You can also contact us for the memo. Oh, there was somebody who was listening. I was talking to people on YouTube now. I was no longer talking to you guys. I thought you guys were like all of you were gone. But in a nutshell, that's it. I'm going to upload this video, then I'm gonna